Hello, welcome to the Nigerian Investor Podcast, TNI for short. This is the unofficial podcast of the Nigerian Stock Exchange. I am your host, Mudiaga, and my co-host by me, Aye for short. TNI Podcast is dedicated to stimulating a renewed enthusiasm among the general public in Nigeria with regards to investing on the floor of the Nigerian Stock Exchange. Ultimately, the goal of TNI is to see many young Nigerians from all walks of life, both at home and in the diasporas, actively participating in the activities of the Nigerian stock market. Before we go further, we would like to place on record a disclaimer. TNI podcast is solely for the purpose of education and not a replacement for professional financial advice. Let's begin. Hello to all our special TNI listeners. Welcome to another wonderful episode 6. As usual, Aye is here with me today. Aye, would you be kind enough to inform our listeners the topic for the day? Thank you.
Today's episode will be looking at capital appreciation, which is the other most interesting benefit of investing in the stock market. We've already covered dividends, which is basically, like we explained, portion of the company's earnings that they usually pay out to shareholders as a kind of reward for holding the stock. And we've already explained that it's usually a portion of the earnings, not always the entire earnings, but some companies do pay the entire earnings, but it's rare. However, today we'll be looking at capital appreciation, which is one of the biggest gains of investing in the stock market. In fact, some people will say it's the only gain because they invest principally for capital appreciation, just because of how much gains you can make from just capital appreciation alone. Modi, do you have anything to tell us about capital appreciation?
Yes, like you said, capital appreciation is usually the main draw to any form of investment in the world, even those pausing schemes. Most people, they tell you if you invest a certain amount of money and within a couple of days, months, the money will double, triple, quadruple as you may have it in those pausing schemes. It's not also different from stock market when it comes to the equity market and even any other form of investment. People that buy goods, people that even invest in cryptos, they are all drawn to the market because of capital appreciation. Aye is very right when he was saying that it is the main reason why most people want to invest. Even people that invest in real estate, when they buy land, they want the value of the land to increase. And that's why most people get into investment in the first place. It's part of the capital appreciation. Capital appreciation is the increase in the value of an asset or an investment over time. For capital appreciation to occur, there must be an investment and there must be time. The time it takes for it to appreciate determines the type of capital appreciation. For some people, they want it very fast. Capital appreciation to be within weeks, months. For others, they are happy to wait for a long time and see how it pans out. I think that's one aspect. What do you have to add to that?
Yeah, the interesting thing about capital appreciation is that it only happens when an asset is worth more to those who are willing to buy it or purchase it than its current value, and they're willing to bid a higher price for it. So that's typically what we see when we see a asset appreciating in value, whether it be it on land or stocks or whatever it might be. People are willing to pay a higher price for it today than the price that it was trading at as of yesterday. And that's what just leads to this appreciation. Generally, we tend to see this willingness to pay a higher price when there's a lot of optimism around a specific asset. So since we're relating this to the stock market, if there is optimism around a stock, you will tend to see the price of that stock appreciating to reflect the optimism, because you have a lot of people bidding for the stock or wanting to buy the stock. So there's demand, but then you have very few people willing to sell the stock, or even at all, they're willing to sell at a higher price. So we tend to see that just throw the value of the stock upwards.
Yes, that's a very important factor that can determine the capital appreciation, which is the increase in demand and reduce in supply. And another one is improve asset performance. When a particular asset, in this instance, a stock of a company, if the parent company performs very well in terms of their earnings. When they release their earnings, whether a quarter earning or half year earning or full year earning, and investors they see that the earnings, the top line and the bottom line, they look very good. It encourages investors to invest in that company. So earnings are another factor that can determine capital appreciation. If a company does well in its financial reports, people will want to flock to that company because they know the company is going to make them money. Another factor that could also influence capital appreciation is favorable market conditions. If the market conditions are favorable to the company, then investors will be interested in investing in the company. For instance, I don't really invest in companies that are exposed to the forex for them to be able to produce their goods and services in Nigeria. Companies that import raw materials to make finished goods in Nigeria, I'm really skeptical involving myself in them because of the volatility of the forex market. To me, that's not a favorable market condition. It puts me off, and I wouldn't want to invest in such company. If many people have the same sentiment like I do, then those stocks that are exposed to the forex, they won't really appreciate furthermore. But I'm just trying to use that as an example. But I think not everybody has the same sentiment as I. But favorable, the market condition to me is not favorable to those companies. So I feel like I will not be risking my investment to expose myself to those companies. That's another good example of favorable market conditions. On the other hand, we have banks that are involved in this forex stuff. Banks they tend to make a lot from the forex exchange. Why the forex is not good for some companies, for the banks, I think they are benefiting from it because they make a lot of money from the fees they charge when you want to do this forex exchange and all that. That is a favorable market condition to the banks. People are really interested in exposing themselves to the bank because they know the bank is going to make them a lot of money due to the favorable market condition when it comes to the forex exchange. That's a very good example of another factor that could affect capital appreciation. Aye, what do you have to say about that?
Yes, yes, yes. Agreed, agreed. And interesting enough, since we've already mentioned even dividends and companies retaining earnings, we also it's also very important to keep in mind that companies tend to grow, and most of this growth tends to come from them constantly reinvesting in themselves. Most of this retained earnings goes back into growth, right? They use the fund growth, either acquiring of more capital assets that can be used to generate more money, and we see this reinvestment adding up to the earnings, like you mentioned, with the positive earning growth of the company. And this also tends to feed into the stock price appreciation, because when a company is growing, when you see the earnings growing and shareholders' funds are growing and assets are growing and all revenues are growing and all of that, bottom line is growing, top line is growing, bottom line is growing. It just shows you that this is a company that's likely going to grow. So I'll likely make more money down the line, even more dividends. And that can also lead to the positive market sentiment that you're talking about, and that can in effect also lead to stock price appreciation. Yeah, but this is
Yeah,
not
that's
always the case, of course. It's not
yeah,
always the
it's
case.
yeah, so it's not yeah. So it still
So
depends on
we
the
also,
sentiment, right?
yeah, it still depends on sentiment. Very much on sentiments. We've also seen cases of stock appreciating and they have no they have nothing really to back them up except just unusual activity around them, or maybe just news around them. Yeah. So there are a lot of factors that drive stock price appreciation, right? Yeah.
Mm-hmm. That's true. So now one thing I want us to distinguish between capital appreciation and capital gain is that capital appreciation is when the value of your asset increased from your entry price. For instance, you bought a stock of a company at 10 naira, and after about 6 months, the company is currently trading at 18 naira. There's a difference in price. Your entry price of 10 naira and now it's trading at 18 naira. That's 8 naira difference. That is a capital appreciation. If you don't sell the stock, if you keep the stock, then that remains a capital appreciation. But the moment you decide to sell that stock and take the profit, it becomes capital gains. That's just the difference between a capital appreciation and capital gains. When you decide to convert your
Interesting.
assets to cash, it becomes capital gains. Okay. Yeah.
Interesting. This is interesting because I wouldn't have even known this, and it's even nice that you've mentioned this mode because this is a learning moment for me. Because I always assume that they are always one and the same word, right? Capital gains, capital appreciation, and they are just interchangeable words. But I like this, and it's a very interesting thing that you mentioned, Muji. I think also
Yeah.
just to add to what you said is the other side of when you don't sell and it's called unrealized gains, right?
Yes, it's
When you
unrealized.
sell it, it becomes capital gains. But when you don't sell, it still is referred to as unrealized gains or loss, depending on whichever side you are on. But I guess when you don't sell, it's called unrealized gains.
And this capital appreciation is very important because it plays a lot in the psyche of a lot of investors, especially new investors to the stock market. Why I say that is because most people that come into the stock market, they have this opinion that once they buy the stock of a company, it should go up. There should be an appreciation at all costs. So when this doesn't happen, it feels like they've made a wrong decision. And most times people, they're very quick to sell off at a loss. They, instead of having a capital gain, they end up experiencing capital loss because they have to sell off. They read that because the reason why they are drawn into the stock market in the first place is capital appreciation. There are very few people that come into the stock market because they want dividends, except people that are well versed or probably people that are wealthy, that you're just looking to maintain wealth. For most people that are looking to earn money, to create a source of living from the stock market, they are mainly drawn because of capital appreciation. And most times, these people, they are not really well experienced in the stock market. So they make decisions that are not really healthy to their investment goals. And because of that, they might end up running at a loss. And that negative experience moves faster because there is no news like bad news. They can easily spread that news that, oh, the stock market is a place where you lose money because I invested my money into the stock market and I lost a lot of money. Is a scam, is not real, is a Ponzi scheme, because of the lure of capital appreciation that they fail to realize. And that is how the psychic work for most people that are involved in the stock market.
Yes, interesting that you point this out because I always believe that stock price appreciation it's only an advantage if the stock reaches a price that it's good for you to exit the stock. Otherwise, it just makes the stock more difficult for you to acquire more units. You can imagine a stock selling at 10 naira per share, and at 10 naira you can buy maybe you have a million naira, you can buy what? You can buy 100,000 units. Yeah, and then the stock then appreciates to 20 naira per share. That same 1 million naira can no longer afford 100,000 units. Now it can only afford 50,000 units. And so the stock has become more expensive for you to buy. So if imagine you bought the stock at 10 naira per share and the stock has appreciated 20 naira per share and it's not at a price where you can exit, then all that gain is all just psychological until it hits a point where you can then capitalize on it. So stock price appreciation is useful if only if it gives you the opportunity to exit, right?
Yes.
This is just my own personal opinion anyway. This
I
is
agree
just my
with
own
you.
personal opinion
Yeah, I agree
on
with
the
you. I agree with
subject.
your, yeah, with your opinion. Yeah. Yeah, I agree with you.
Yeah. And I think it's important that young investors understand this part about investing that the appreciation of a stock is only going to be useful to you if you can exit. So when you see a stock going up, it's not for you to get excited and start saying, "Oh, let me buy this stock," because we see this all the time. They see a stock going up, young investors see a stock going up, and they are excited and they're like, "Oh, should I buy this? Should I buy this?" But the right time to buy a stock is often when the stock is not even moving or going in the opposite direction. That's often the right time if you've done your due diligence and you've discovered that this is a
Yes.
valuable company. You buy it at that price and then you hold it, right? You hold it, and for as long as the stock is cheap, you keep buying it, right? And when the stock begins to appreciate, you just have to if it's still cheap, you can keep buying more, but you just have to sit and wait for it to reach a price where you can successfully exit. Otherwise, the appreciation just denies you the opportunity to even buy more units. And you might get a point where a stock has appreciated, you've gained a lot of money, but you're not ready to sell. It's just unrealized on gains that you're looking at on your portfolio. So there's a lot of psychological tricks that investors need to learn to master so that they can be masters of themselves and therefore masters of their own money.
That's right. That's right. Because capital appreciation is a very important topic because, like we said, a lot of people dwells on capital appreciation. That's the main reason why most people invest in the first place, and especially for traders, people that buy and sell stock every now and then, they are looking for that. And like Aye said, you don't just have to rush into a stock because the stock is appreciating. You need to know the reason why it's appreciating. Is it that there's a good any results that they released, or is it just market sentiment, or is it someone that is just trying to hype the stock? Because it happens too. Most times news travels faster. People listen to news. If they hear, for instance, that the company is about to delist or the company is about to be bought over by another company, they might sense the fact that they're going to make a key from it. The value of that stock we appreciate in terms of price movement. But you have to also factor in other things like how liquid is the stock? Can you easily sell that stock when you need the cash, when you want to convert your assets to money? You need to also factor in that because some stocks are illiquid. Very easy for you to get in, but it becomes very difficult for you to get out of it. And if you factored all this in, and if it is alignment with your goal, your investment goal, then you can make a go for it. You can decide to involve yourself in it. But if you don't do your necessary homework and you involve yourself in the stock, you might end up losing money, and that experience will not be really encouraging for you to continue. You just have to study what is going on, why things are moving that direction, and what to do about it, and how, if you want to invest in it. There are so many companies listed on the floor of the Nigerian stock market, over 100 companies. So there's an opportunity for you to make money from any of this stock, but just do your own due diligence, do your own assignment, and know what is going on before you involve yourself in it. Yeah, well, what do you think is the best approach to
Yeah,
when you're looking at capital?
yeah, I completely agree with you. It's very important, and I sincerely I think we'll be able to go into at least teaching our viewers some very important ways of valuing a stock. It's very important for you to understand what appreciation means for you when you buy a stock. That if a stock is said to be cheap, you should be able to understand what we mean when we say it's cheap, right? And when we say a stock is expensive, you should be able to understand that it has reached a price where it is no longer attractive to invest in it, right? And it's important for you to have this in mind when you're approaching the stock market because it is the buy low, sell high formula that applies when you say a stock is cheap, you buy it and then it goes up and then you sell it at a good price, right? So I completely agree with what you're saying, Udi. Yeah.
Okay, moving on now, we want to look at some of the capital appreciation so far this year. On a weekly basis, we can see the capital appreciation of a company. Then on a monthly basis, year-to-date basis, and even yearly basis, 5 years, 10 years, 20 years, you can look at the appreciation. I'm looking at my Yosha app right now, and I can see that year-to-date, that is from January 1st, 2024 to today, there's a company, Julie. It has appreciated from January 1st this year to today by 1,645%. That is the appreciation it has made. What we're saying now here is that if you had invested 1,000 naira in this company, multiplied by 1,645%, that's how much return in terms of capital appreciation you would have gained. Then when you sell it, that will be a profit to you. Ohandu has made 726% this year so far. ROT Briscoe has made 400%. Veritas Capital Assurance Company has made 344% this year alone. Julius Berger has made 164%. Geregu Power Plant has made 188% just this year alone. IMG 160%. Seplat Petroleum 146%. Cresco has made 137%, and so on and so forth. These are capital appreciation for this year. Also, there are companies that have depreciated this year too. The records are there too. So you can also see companies that have depreciated. Now, the companies that have depreciated so far this year, from January 1st to this, as we speak, the number one company is VDF Group. I know they did a stock split, so it's going to appear as capital
Yeah.
depreciation. You
Yeah.
understand?
I think we can take video off the list because that was due to reconstruction.
Yeah, even if you
Yeah, stock
if you
split. Yeah, stock split.
yeah, so they did stock split. Oh, that's the most depreciated company this year, and it's 77%. The next company depreciation is Multiverse, is 56% depreciation this year. Dangote Sugar is next, number three, 45%. Even the companies that have depreciated this year, the percentage of depreciation, you can't even compare it to the percentage of appreciation of companies.
And a very
Yeah,
interesting thing about the
yeah.
appreciation is it for some of them they even beat the inflation rate we have here in Nigeria, which means that investors who bought them at the right price are holding real positive returns even after subtracting the cost of inflation.
You see, that's something most people don't really understand because why? They don't delve into this analysis. They just buy at face value. They just buy by words of mouth. That's why we are doing what we are doing, just to educate people so that you can understand the stock market and how it operates. Because if you have this information, knowledge is power. If you have knowledge, you'll be able to use it to invest in the stock market positively, not by word of mouth. Buy this stock. Oh, this stock is doing well. To just involve yourself in it. You understand? So if you look at the analysis, you will see that there are companies that are doing very well. Even they beat the inflation rate in Nigeria right now. They are doing well more than the company that have depreciated. So the chances of you getting into the wrong company as an investor, if you follow the analysis, if you read the books, the chances are very slim. That's the information we're trying to pass on to people so that you can understand how to invest.
One interesting thing I would also like to talk about when it comes to capital appreciation is how we can even use it to basically compound and grow our portfolio. And you have this capital appreciation from one stock, and if the stock hits a good price that you can exit, you can then use the proceeds from that sale to even capitalize into another cheaper stock, which will then hopefully also appreciate at the same time. And this can
Mhm.
just lead to your portfolio growing and swelling over time, and you see a lot of money coming in at the end of the period.
That's true because capital appreciation is a very good way of growing wealth over time. And if you really understand the game, like I said, you know when to pull out of a particular stock and use the proceed of that stock to get into another stock. That way, if you understand the game very well, you end up becoming very successful in that aspect. And yeah, it's one of the best way to go about investing. But it comes with time and learning, and it comes with your willingness to want to improve upon yourself. There is nothing like reading financial reports of companies, follow the news, you listen to investment podcasts, you listen to news about investment, and you also read books. It's so unfortunate that these days we don't really read as much as people used to read back then. Book reading exposes you to a lot of information. It broadens your horizon and it gives you the ability to be able to assimilate information very fast. It changes you positively. There is no negative aspect to when you read books. People don't read good books these days. People always want uh, already made stuff for them. If you read, you learn more, you apply those knowledge, and you should be able to become a better person. That's one thing you need to understand.
Correct. Completely agree with you. Completely agree. So I don't is there more to talk about this topic?
I think we've done a lot on this topic at this time. So we don't really have much to say right now apart from this, but it doesn't mean that this is an exhaustive information that we've given to you. There are so many things to learn about capital appreciation, vis-a-vis every other thing that ties to it, capital gains and all that. But these are the nitty gritty, the main information, the main ingredients that you can pick from capital appreciation and how to apply it and all that. Yeah. Any final words are here before we call it a day on this episode?
Just to encourage our listeners that they should not get dissuaded by or attracted to stocks that are currently just moving up. Where some stocks are already moving up, some stocks you see them they're already moving up, then they're still at a good entry price. But the interesting thing about investing in stock markets is to have already positioned yourself to have invested in the company before it even begins to appreciate, so that when you are buying more of the stock when it's appreciating, you already have a good foundation and a good base So it's a very important thing that investors have to keep in mind, that although appreciation is one of the biggest gains in investing in the stock market, your positioning to take advantage of that appreciation is very, very important as well. I guess we're going to talk about this when we talk about investing goals and just basically preparing yourself to capitalize on stock price appreciation. Yeah.
All right. Thank you so much, Aye, for this wonderful contribution on this episode. On this note, we'll call it a day until we meet again. Bye from us. Bye.
Yeah. Goodbye.
Thanks for listening to another episode of the Nigerian Investors Podcast. We hope in this episode you've learned something very valuable that you can use in your day-to-day investing life. We also want to encourage you to share our episodes on all social media platforms. Share with friends or family. Never can tell whose life will be changing positively. Our social media handles can be found at the show note below this episode. We also have a website where you can listen to our episode free of charge. For those who don't have subscription to podcast hosting sites like Apple Podcasts, Spotify, and Amazon Music, you can listen to our podcast on YouTube free of charge. We have an email address. You can send us an email if you have any question, any query or contribution. And if you also want to be interviewed, you can also reach out to us. Email address tnipodcaster@gmail.com. Continue to share and like and spread the news to all friends and loved ones. Thank you. TNI Podcast is produced by Aye and Moody. Thank you once more. Until we meet again, have a nice one. Bye.